All right, what's up? Welcome to Blockchain Tech and Finance News with me, your host, Ken. If you're on the YouTube side, please do subscribe, turn on the bell notifications right here to Blockchain Tech and Finance News. And we're gonna go right on into it. And what news I have today? Man, I gotta turn this up. Why is it all grainy? That's a little better. Brighten things up in here. All right, I can see in the chat here. I'm running a little bit late, 20 minutes late, and I am basically at the point where I can't make business type calls in the early AMs because those who I'm interacting with in business just can't figure out the business inquiries, needs, everything that needs to be solved moving forward in business and communications, all that sort of stuff. So basically, I'll just be launching this stream and doing my business communications after Blockchain Tech and Finance News. So I can be here around 7:30 and start reading the news at 7:30 a.m. And that is what is meant to be going on here. So because this is Blockchain Tech and Finance News, live weekdays at 7:30 a.m. EDT and Saturdays at 11:30 a.m. EDT time. Every day, weekday, and on Saturday. All right. So also, if you're into NFTs, you can check out my Kins art on OpenSea and Foundation. Follow on TikTok, KinToshi GG. Follow on Instagram, KinToshi GG, and follow on Twitch, KinToshi GG. This is being streamed on Twitter, Twitch, and YouTube right now. You can check the YouTube for the recap videos. And all of the news article sources that I read here will be in the description on that side as well. My nose ring's about to fall out of my face. Fix that. And yeah, put your comments up on here because I could see you right over there. You can have your comments featured here on what news, what you feel is important to have featured here, or other relevant, cool information that you put in the comments there. All right, so without further ado, let's go ahead on into the market watch starting out. And first I want to turn on my super cool, ultra awesome Coding Kin overlay. All right, so on the market watch, we got the, let's go over to the US. Start with the US market overviews. As soon as I try and do something, the index charts just want to not work. All right, we got the Dow up 1.88%. The S&P 500 up 1.97%. The NASDAQ up 2.05%. The global down 1.3%. Gold down 0.72%. And oil down 0.34%. In Europe, we have the FTSE 100 down 0.84%. The DAX down 1.20%. The CAC 40 down 1.20%. You know what? I guess I'll go ahead and keep reading these. Stick to the Dow and stuff. But anyways, the FTSE MIB down 1.59%. The IBEX 35 down 0.143%. The Stock 600 down 1.36%. In the Asia markets, we got the Asia Dow. Turn my mic down a little bit here. We got the Asia Dow up 0.4%. The Nikkei 225 up 0.95%. Hang Seng down 0.49%. Shanghai down 0.13%. Sensex down 0.33%. Singapore down 0.04%. On FX, we got the Euro up 0.05%. The Yen up 0.37%. The Pound down 0.13%. Australia dollar down 0.40%. The DXY index up 0.19%. The WSJ IDX up 0.11%. On the rates market, we have the US 10-year up 0.0957. The Germany 10-year up 0.1510. The Italy 10-year up 0.115. Spain 10-year up 1.101. The UK 10-year up 0.172. Then Japan 10-year up 0.0079. On the futures marketplace, we have the DGIAF down 0.51%, the S&P F down 0.7%, NASDAQ F down 1.02%, gold down 0.68%, silver down 0.95%, and crude oil up 0.49%. And in the crypto markets, we have Bitcoin down 0.46% at 19,476 per Bitcoin. BTC, Ethereum, USD, what we got here is down 0.87% at $1,339.44 USD on ETH. We got XRP up 0.38%, Bitcoin Cash up 0.18%, Litecoin up 0.32%, and Monero up 0.67%. So let's go right on to the first piece of news I have here. Load it up and ship it out and read all about it. All right, so this first article is from CoinDesk in the tech sector of CoinDesk for blockchain type news by Frederick, writer for CoinDesk. Lightning Labs, and I'm all about Lightning Labs and Bitcoin Lightning. Lightning Labs releases software to allow Bitcoin developers to mint and transfer assets on the Taro. Will make it possible to create peer-to-peer Bitcoin and Lightning native stablecoins. Network infrastructure firm Lightning lead a test version of the Taro daemon, a new place of software that will allow Bitcoin developers to create, send, and receive assets on the Bitcoin blockchain. Taro is a taproot. It's either Taro or Taro. Is a taproot powered protocol that was introduced in April and that allows Bitcoiners to issue assets such as stablecoins on the Bitcoin block. Assets can then be transferred over the Lightning Network for instant, high-volume, low-fee transactions. So this is starting to sound like smart contracts on the Bitcoin blockchain. It's been a debate over the years. According to Lightning Labs, Bitcoin Lightning and now Taro, whatever it is, will make it possible to create peer-to-peer Bitcoin and Lightning native stablecoins that settle instantly with low transactions fees and no financial intermediaries. With Taro and in the incredible developer community, we can build a world where users have US dollar denominated balances and BTC denominated balances or other assets in the same wallet, trivially sending value across the Lightning Network just as they do today. Lightning Labs wrote in its announcement on Wednesday. So there's a video here also on that recap, and that's a little short article there, and I'm going to be following the information there about the scaling and pretty much all scalings of the Bitcoin Lightning Network and Bitcoin mainnet network all around. We're about 19 million Bitcoin mined now. I have to check back in on that. All right, so we got Cointelegraph. Biden's cryptocurrency framework is a step in the right direction. This is from writer Mitesh Shah. Cryptocurrency guidelines released by the Biden administration this month show that officials are considering the benefit of crypto. That's a step in the right direction. The White House released its comprehensive framework this month for the responsible development of digital assets following President Joe Biden's March 9th executive order. The order called for regulators to assess the industry and develop recommendations to safeguard investors while simultaneously promoting innovation. While more work is needed, the framework is a step in the right direction as it shows the willingness of regulators to provide the industry with a much-needed regulatory clarity. With the much-needed regulatory clarity it seeks. I'm going to adjust my wind blocker here, if possible. Let's just adjust it. I'm going to adjust it over this way. All right, so I'm not getting any pops in the microphone. Air pops. Pops to be filtered out. All right, adjust that back up. Cool. Let's keep going. The framework's recommendations addressed 6 key areas to protect market participants, offer access to financial services, and promote innovation. While Biden's administration has focused more on just the protection of consumers in the industry in the past, it is encouraging to see the framework focused on all 3 groups in the industry: consumers, investors, and businesses. The framework cited a 2018 Wall Street Journal study that showed a near quarter of coin offerings had red flags such as plagiarized documents and promises for return on investments. To encourage protection, the framework encouraged regulators to aggressively pursue unlawful practices in the industry, redouble enforcement efforts, and increase public awareness efforts to promote education in this area. Additionally, the framework provided steps for both the Biden administration and Congress to fight against illicit finance, such as amending the Bank Secrecy Act, monitoring transactions, and exposing disrupting illicit actors. The framework also discussed promoting access to safe and affordable financial services. This is one of the key positives for the cryptocurrency industry, as it has provided access to financial services to millions around the world. It mentioned the fact that nearly 7 million Americans have no bank account, and another 24 million rely on non-banking services, which can be costly. By encouraging payment providers to have increased instant access to payment systems, prioritizing the efficiency of cross-border payments, and supporting research in technological and socio-technological disciplines, the framework can help provide much-needed financial services to those in needs. So yeah, adults without a bank account, largely over in these different areas over here. You can see that graph there. Biden will also consider creating a federal framework to regulate non-bank payment providers, some of which now offer cryptocurrency services. The framework will also provide financial stability by having the Treasury bolster financial institutions' capacity to identify, track, and analyze emerging strategic risks and mitigate cyber vulnerabilities. The recommendations promote the advancement of responsible innovation in digital assets. Biden does this by having the Office of Science and Technology Policy and National Science Foundation, NSF, develop a digital assets research and development agenda, as well as providing regulatory guidance and technical assistance to innovate American firms in the industry. The NSF will also back social sciences and education to promote safe and responsible digital asset use. This is a step in the right direction for regulators, as it allows them to first understand both the technological benefits of this technology while also tracking the environmental impacts in order to provide a clear strategy for the industry to move forward. This will allow the United States to reinforce its global financial leadership and competitiveness by helping innovative technology and digital asset firms to become stronger in international markets, as well as assist foreign and developing countries in building out their digital asset infrastructure with United States values intact. The area where the framework has received the most resistance is related to exploring a U.S. central bank digital currency, CBDC. While at face value, CBDCs seem to be the best for both fiat and cryptocurrencies, the implications can have widespread negative effects. The recommendations note potential benefits of a U.S. CBDC, such as a more efficient payment system, faster cross-border transactions, and environmental sustainability. While these certainly are positive, the CBDC's main flaw stems from centralization. Having a centralized system governing CBDCs means they are more easily tracked, have more vulnerable systems when compared to that of Bitcoin, and can lead to a potential increase in data breaches. With that said, Biden's officials are simply exploring the use case for CBDCs, meaning that he and his regulators are gathering feedback to determine the best course of action. Cryptocurrencies have existed for over a decade, yet despite the industry looking to the government to provide regulatory clarity, needing to remove much of the uncertainty and doubt, it has not been until this year that the industry finally received an indication of what that clarity may look like. Biden and the regulatory agencies that submitted 9 reports to him have created the first ever comprehensive regulatory framework for cryptocurrencies. It does a commendable job targeting the areas that are most in need of regulation, and by increasing research in this area along with listening to market experts, what is a great first step can become exactly what the industry needs to continue to grow and innovate without a looming threat over its shoulders. So that's this article here on Biden's cryptocurrency framework is a step in the right direction. All right, so moving on into the next article piece here. Someone just paid $4.5 million for a CryptoPunks Ethereum NFT despite bear market. It's the 4th highest CryptoPunks sale when measured in ETH, and a surprising pickup in a time of declining NFT sales. This is from writer Word for Crypt. In brief, CryptoPunk NFT number 2924 sold for nearly $4.5 million worth of Ethereum today. All told, Ethereum has generated almost $2.4 billion worth of trades to date. Overall, NFT sales might be down significantly from earlier this year, but collectors are using the bear market and falling and the falling price of ETH to snap up relatively good deals on desirable digital art pieces. Here's a predominant example. CryptoPunk NFT number 2924 just sold this afternoon for nearly $4.5 million worth of Ethereum, the largest single NFT sale in recent memory. Measured in ETH, the 3,300 ETH sale is the fourth largest all-time for CryptoPunks, although it's much further down the list when measured in terms of US dollars at the time of the sale. CryptoPunk number 2924 was sold by a notable pseudonymous NFT collector Seed Phrase. Although it's not immediately clear who the buyer was, this particular CryptoPunks NFT was last sold in November for 2020 for 150 ETH, just $71,000 at the time. CryptoPunk number 2924 bought for 3,300 ETH, $4,051,633.94 at the time of writing this article, by this address, from this address. So it's one of just 24 apes in the entire CryptoPunks collection, which spans 10,000 unique NFT profile pictures, and is considered the 38th rarest NFT in the project by Rarity Tools based on its attributes. CryptoPunks is one of the most valuable and influential NFT brands, as the Ethereum collection is set the core template for modern profile picture projects. It influenced later hits like Bored Ape Yacht Club and Doodles, and CryptoPunks sales have yielded nearly $2.4 billion to date in secondary volume trading. The project was launched by Larva Labs in 2017, an early precursor of the NFT market craze. In the last 2 years, Larva Labs ultimately sold the IP rights to Yuga Labs, the Bored Apes creator. In March this year, Yuga Labs has since opened up commercialization rights to all owners, letting them use their punks imagery for derivative art and projects. The all-time CryptoPunks sale record was set back in February when Deepak, CEO of cloud blockchain infrastructure startup Chain, purchased Punk 5822 for 8,000 ETH, nearly $24 million worth at the time. That's insane. Wow. But is it really insane? Art is a big procuration marketplace that is said to outperform the S&P 500. So that's that article here. This next article is also from Decrypt. Christie's goes fully on-chain with new Ethereum NFT marketplace. So Christie's auction house is here we go. The 256-year-old institution has launched Christie's 3.0, a new platform anchor exclusive collection from Diana Sinclair. This is also from writer Andrew Hayward. In brief, Christie's has launched a new on-chain Ethereum NFT market, Christie's 3.0. The auction house previously hosted notable NFT auctions, including the $69.3 million sale of artwork from Beeple. And Christie's has already made a big splash in the NFT space, most notably auctioning Beeple's Every Day, the first 5,000 days artwork for $69.3 million in March 2021. This went to a charitable initiative. The Story Auction House is now fully embracing Web3's decentralization ethos by launching a new marketplace in which auctions take place on the public Ethereum blockchain. Launched to Christie's 3.0 marketplace is built so that transactions are recorded in full on the Ethereum blockchain. The 256-year-old auction house says it will also provide tools for compliance and tax purposes. The new Christie's platform was created in collaboration with Manifold, a startup focused on smart contracts or the code that empowers NFTs and other decentralized apps. Christie's has also partnered with blockchain analytics firm Chainalysis, and metaverse platform Spatial to enable additional functionality for its marketplace. So here's a tweet from them. We recognize and bring young emerging artists to an international and digitally savvy market. Christie's 3.0 deepens our ability to connect clients to the best of the NFT market now via a sophisticated and secure blockchain native platform for sales. The inaugural sale is a highly curated auction of 9 new NFTs by celebrated visual artist Diana Sinclair, created and minted specifically to launch Christie's 3.0. The auction of Diana's work will be open for bidding from September 28th to October 11th. So you can stay tuned there on their updates if you follow their Twitter if you're interested in that, at Christie's Inc. While some previous Christie's NFT auctions have grabbed Headlines: the actual transactions were not typically conducted on-chain, a process that provides transparency regarding the wallets involved in the flow of payments. Christie's 3.0 reshapes that approach with on-chain transactions more akin to those from marketplaces like OpenSea and Rarible. Nicole Sales-Giles, director of digital art sales at Christie's, commented in a news release that the new marketplace would offer the public the opportunity to collect exceptional NFTs in the way they are meant to be transacted on-chain. However, Christie's will continue to emphasize on curation rather than allowing anyone to list their artworks or collectibles. For the launch of the marketplace, Christie's is offering just one exclusive project, a collection of 9 NFTs from Diana Sinclair, a multidisciplinary artist. Sotheby's, the chief rival to Christie's in the high-end auction space, is also deeply entrenched in the NFT world. The auction house launched its Sotheby's Metaverse NFT marketplace last October and has hosted its own high-profile real-world NFT auctions as well. So, cool stuff. We got Christie's going fully on-chain with new Ethereum marketplace. And maybe they'll roll out things for more people to integrate, but so far they're just doing exclusive collection drops of certain artists that they pick and choose from. That's from Cointelegraph, from Savannah Fortis. MetaMask adopts custodial features for non-NFT hungry institutional investors. The MetaMask institutional wallet added Kobo NFT management to its growing list of custodial services for institutional investors. I do know of Kobo. I've known Kobo for many years, actually now. Many years, in the few years that, was it 2016, 2017, something? Institutional investment is pouring into the crypto world, notably the non-fungible token NFT scene. In reaction to influx, MetaMask Institutional announced another addition to its custodial offerings for institutional level clients. MetaMask partnership with NFT management and storage service Kobo. Kobo also works with cryptocurrency as well, from my understanding. Again, I actually had some business communications with them back in Kobo Custodial back in 2018, I think 2019, something like that. So Kobo aims to create a one-stop platform for large corporations dealing with digital assets. Although MetaMask is a non-custodial wallet at its average user level, the institutional branch of the wallet has been adopting custodial partnerships in various countries around the world. Tavia Wong, the director of marketing and business development for Kobo, told Cointelegraph that not only does custodianship provide asset protection, but for institutions specifically, custodianship becomes useful on an administrative level. Because of the high level of users and different clearance levels, institutions require additional features to avoid internal failures and the consequence of negligence. While wallets like MetaMask have been deemed not as user friendly in the past, this addition to custodial offerings prioritizes usability for big investors. The new integration allows institutional clients to designate roles the company alongside internal collaboration tools. According to Wong, this enables user limits on buying, trading, and selling as permitted by the administrator. With multi-sig access, it ensures that no single entity will be able to control all assets, removing any single point of failure. If you want to learn more about multi-sig, I can go into that on future streams. Nonetheless, the debate between non-custodial and custodial wallets still rages on, with many in the space touting the slogan, "Not your keys, not your coins." Non-custodial wallets are often looked to for more security and financial autonomy. However, as mainstream users without atypical backgrounds continue to enter the space, custodial wallets often offer a more user-friendly environment. Some users even refute the aforementioned slogan in favor of greater accessibility for easy adoption. So someone from this person, "Not your keys, not your crypto," is a short-sighted, small-minded, and impractical. If we don't create solutions that welcome everyone to crypto, then it won't be anyone's crypto because it'll fall irrelevantly to the annals of history. Traditional finance giants like Societe Generale, one of the largest investment banks in Europe, recently opened up crypto asset management services to provide its clients with an easy on-ramp. Nasdaq also announced on September 20th it will offer crypto custodial services. So that's this here. MetaMask adopts custodial features for NFT-hungry institutional investors. All right. Sometimes this works, sometimes it doesn't. Let's see what it's going to tell me today. All right. BBC, Tim Cook, no good excuse for lack of women in tech. So we're going to transition. We went into some blockchain news with the Bitcoin Lightning. We went into cryptocurrency news with the regulatory framework in the Biden administration. We just did some NFT news here as well. And now we're going to migrate over into some tech news and finance news to close out the stream for the day. So this is from this is from writer Zoe Kleinman for the BBC.com. Tim Cook, no good excuse for lack of women in tech. So Apple chief executive Tim Cook says there are still not enough women at the table at the world's tech firms, including his own. In an exclusive interview with the BBC, I close this ad here. Apple chief interview with the BBC, Mr. Cook said technology will not achieve nearly what it could achieve without a more diverse workforce. He said there were no good excuses for lack of women in the sector. He also said that he also thought augmented reality, AR, and the concept for the metaverse were profound. In the future, people will still wonder how we lived without AR, he says. We're investing a tone in that space. Augmented reality is a mixture of digital content and the real world. A very simple example might be using the iPhone on your camera to insert fully virtual furniture before you buy it and to see how it might look in your house. That's what Apple's been doing recently in their iPhones. The metaverse is the concept of entire, and also their iPads or whatever. The metaverse is a concept of entire virtual worlds, and big tech is investing heavily in it, not least Meta, formerly Facebook, which rebranded itself to reflect its new priority. Meeting Tim Cook, I met Tim Cook during his first visit to the UK since the pandemic. In person, the boss of the world's richest company is affable, polite, and thoughtful. He's soft-spoken. He's softly spoken and was dressed in his trademark dark clothes. He wasn't big on small talk, although we joked about the British weather, and he offered his condolences on the death of the Queen. Mr. Cook told me that he's not a great role model for work-life balance and that it isn't a phrase he associates himself with. There's little distinction between personal and work. They blend, he says. He adds that he tries to compartmentalize issues that are outside of his control. I realize they are there, but I don't obsess with it, he says. He was fascinated with my BBC audio recorder and turned it over in his hands a few times once we had finished our interview. I confess that I'd have to ask his colleagues if I could borrow some wired headphones to plug it in. Apple largely ditched the headphone socket from its iPhones in 2016 in favor of wireless earpad. Okay, I want to skip this. Let's see. He's keen on talk about another. He was keen to talk to me about another subject close to his heart: diversity. No good excuses. Apple has just launched its Founders Development Program for female founders and app creators in the UK. I think the essence of technology and its effect on humanity depends upon women being at the table, Mr. Cook says. Technology's a great thing that will accomplish many things, but unless you have diverse views at the table that are working on it, you don't wind up with great solutions. He said while companies, including his own, had made progress into diversity, there were no good excuses for the tech sector not to employ more women. Apple had 35% female staff across its global staff in 2021, according to its own diversity figures. It launched its original Apple Health Kit in 2014 without a period tracker, which led to accusations that it was an oversight due to male bias among its developers. Deloitte Global estimate large global technology firms will reach nearly 33% overall female representation in the workforce in 2022 on average, with 25% occupying technical roles. One challenge facing the sector is the lack of girls choosing to pursue science, tech, engineering, and maths subjects at school. Businesses can't cop out and say there's not enough women taking computer science, therefore I can't hire enough, says Mr. Cook. We have to fundamentally change the number of people that are taking computer science and programming. His view is that everybody should be required to take some sort of coding course by the time they finish school in order to have a working knowledge of how coding works and how apps are created. Apple has also created its own program language, Swift, along with content for learning how to use it, equalizing the playing field. Mr. Cook and I also met with a small group of female app founders, 3 of them who have joined Apple's new program. Apple app creators Alexia De Broglie, Sahar, Ariana, and Zoe. Alexia, Ariana, and Zoe are all on Apple's new UK program for founders. One of those is Alexia de Broglie, who created a personal finance education app called Your Juno for women and non-binary people after being shocked by how little her female friends understood about finance. She said she belongs to some WhatsApp groups for founders and that some of those are 90% male. The women we all know each other on a first name basis, which is crazy because there are so many men that are building startups and they definitely don't know each other. Ariana Alexander Sefre runs Spoke, a wellness app aimed at young people, which she created after her younger brother lost a friend to suicide. I hope that in 5 years there's not even going to be a thing of female. I hope that in 5 years that there's not even going to be a thing of female founder, or there's not even going to be a defined niche, because there will be just so many different people working on different things, she says. I'd love to see the whole playing field just equalized. So that's this here. No good excuse for lack of women in tech. Our next news article we have coming up here is exploring new technologies, how new technologies are changing finance. The H and the HTTPS. There we go. This is from MIT News on campus and around the world, from writer Marina Chan, MIT Hong Kong Innovation Node, exploring how new technologies are changing finance. MIT students team up with Hong Kong students and companies to explore emerging opportunities in fintech. MIT Hong Kong Innovation Node held its annual financial technology fintech entrepreneurship bootcamp this summer, connecting university students with corporate partners to tackle real-world business challenges. Building on the belief that innovative creative solutions deliver more value and a better experience, the MIT Entrepreneurship and Fintech Integrator MEFTI program featured unique problem statements proposed by Prudential Hong Kong and OpenHive. These challenges are unique opportunities to bring ideas and talent together to address opportunities in the area of digital engagement, the metaverse, and leveraging alternative data and artificial intelligence, says Charles Sodini, the Lebel Professor of Electrical Engineering at MIT and a faculty director at the Node, embodying a blended reality. Business models and the rules of engagement are evolving with changing consumer behaviors and emerging new patterns, opening a floodgate for companies to seize opportunities to innovate in the digital space. For Nesu Namu, a junior at MIT studying computer science and engineering, this year's challenges were a great catalyst for thinking outside the box and leveraging new technologies. He says, Prudential combined with the metaverse prompt broadened my understanding of what a fintech app could be. His team, consisting of students from MIT and from Hong Kong, designed an incentive-based social running app to motivate millennials to maintain a healthy lifestyle. Differentiating from other apps in the market, the app combines fitness, partnership rewards, and social connectivity wherever runners are. The idea came when user interviews revealed the challenge of exercising and doing physical activities with friends encumbered by travel limitations. Tackling market problems requires testing early and failing fast. Yep. For Namo, who aspires becoming an entrepreneur and angel investor, the disciplined entrepreneurship framework applied in MEFTI is a consistent way to identify problems and rapidly test ideas, he says. A core feature of the bootcamp is to figure out what customer problems exist and what problems to solve. Staying faithful to the framework, Namu added that his team overcame this challenge by making assumptions and testing them through primary market research. This process helped distill the problem and isolate an emerging opportunity to integrate a mixed reality experience into their proposal, achieving a synergy between industry and academia. That was academia. There are tremendous benefits to giving students access to companies as a sandbox for creative problem solving. The exposure facilitates action learning by helping students apply theory into a practical context, but the learning gains are mutual. We actually learned a lot from everybody else around us and the students, says Sam Lim, MBA 004, Chief Operations and Transformation Officer at Prudential Hong Kong. A circular style of engagement in the spirit of collaboration and community building enabled mentors to draw on the millennial digital intelligence as well as offer industry insights. Jasmine Zhang, 22, who studied electrical engineering and computer science at MIT, student of 2022, I think, enjoyed the opportunity to work closely with industry partners, learning about their concerns, core business logic, company mission, and the future vision. It's rewarding to see how our financial project met their expectations in a way that they think is profitable and innovative. In 2022, the 2022 showcase marked the 5th year of MEFTI, featuring an ensemble of industry experts and business leaders who provided feedback on these students' projects. And note, Z-Line, a health and wealth super app plugin for millennials to boost awareness of financial knowledge and engagement of financial products. Meta Assurance, an insurance product offering digital asset owners protection from physical damage to NFT wallets and cybersecurity threats. Metabolic, an incentive-based social running app to motivate millennials to maintain a healthy lifestyle, featuring combination of fitness, rewards, and social connectivity wherever runners are. And Nexus, I think I've heard of Nexus actually, an online platform matching potential borrowers to bank lenders using predictive modeling techniques, drawing from alternative and traditional data. And EcoCash, a lending platform providing microloans to millennials to meet their financial goals while prioritizing their spending on environmental, social, and governance ESG-focused products. Lim, who was among the judges, hopes that students who are interested in entrepreneurship pursue their passion. Without that passion, you'll find that you can really with that passion, you'll find that you can really succeed in anything you do, he says. And I agree. So this is from MIT News, exploring how new technologies are changing finance. Again, I'll have all these articles on the recap on the YouTube side, so you can watch and read and research more at your own due diligence. All right, tech and mental health, what's working and what's not is the next article I have coming up here, serving it right to you here on Blockchain Tech and Finance News. This is from Med City News in the health tech sector, from writer Marisa. Tech and mental health, what's working and what's not. While some areas in the mental health tech space have been effective, some areas need improvement, experts said at Med City's Invest Digital Health Conference. Providing digital mental health care can be difficult do in a cost-effective way, and many clinicians are wary of adopting technology in their practices. As mental health is emphasized more in people's daily lives, digital care in the space is becoming a booming industry. It's evident in the money. The mental health tech sector raised a record $5.5 billion in 2021, a recent CBI Insights report showed. But while some areas in the digital mental health space are working, other areas need improvement. The topic was discussed Wednesday on a panel at Med City's Invest Digital Health Conference. What's working? Between two people who have depression, one may struggle getting out of bed in the morning, while another may be angry and display outbursts. Those people have the same diagnosis and that same standard treatment, but why do we think those two people should receive that same type of treatment? Said Jennifer Gentile, Senior Vice President of Innovation at IESO. Instead, what's working is the personalization of treatment plans. Even if two people have the same diagnosis, they may have different care needs. That's where evidence-based interventions or programs that have been proven to work come into play. I see evidence-based interventions and training of psychiatrists, psychologists, Gentile said. Gentile. When supervised, when things seem to be going well, it absolutely can work. Examples of evidence-based interventions include cognitive behavioral therapy, which includes changing thinking patterns, the dialectical behavior therapy, which helps people understand difficult feelings and learn to control them. When it comes to technology, there are several apps that use these approaches, such as Wissia and DBT Diary Card and Skills Coach. Another area that's gaining traction in mental health is a direct-to-consumer solution, said Crystal Barrett O'Loughlin, founder and CEO of Angel Aid, a mental health support nonprofit for those living with rare diseases. These solutions are allowing people to gain mental health support on their own, and it's gained popularity in recent years due to COVID-19. There are so many different solutions out there for people to pick up the phone and literally just start working with their own mental health needs, ending that isolation, ending that medical uncertainty, ending that sort of disruption in home and work life, O'Loughlin said. Laughlin. I'm going to say O'Loughlin. People are looking less and less outside of themselves, and they're finding their own solutions. What's not working? While some solutions are proving to work for those struggling with mental health, there are still issues when it comes to access for patients, Gentile said. About 20% of people with mental health conditions are actually able to access care, and about 50% of those who receive care actually get better, she cited. Additionally, a lot of data in literature is outdated, she said. Our data set is built on predominantly white male colleagues. Students, Gentile claimed, a lot of our literature hasn't changed in decades now with their outcomes rate. Another area that's proving challenging in mental health is providing services in a cost-effective way, said Deepak, founder and CEO of Oxford VR. While some forms of treatment, like cognitive behavioral therapy, are effective, it's challenging to do it at scale, he said. There are things that work, so DBT and CBT work, and the data is out there, he said. The problem is actually expensive. It's actually expensive to deliver. It costs a lot of people time. So can you scale it? You can't, because you've got to throw more people at it. In fact, you've got to throw highly trained people. Not only is it expensive to provide effective mental health care through technology, but it can be difficult to get clinicians to adopt new solutions. Learning new technology can take a lot of time. Additionally, a recent paper in AI and mental health showed that some clinicians are worried they might be replaced by AI. Getting clinicians to do anything new is like pulling teeth. It's just borderline impossible. In reality, adopting new technology can improve the workflow for clinicians who spend much of their time doing administrative tasks, he said. It can also offer them beneficial training, much like golfing, providing mental health care practices. Mental health care takes practice, something virtual reality can provide. The reality is, unless you actually practice and build that muscle memory, it's going to be really hard to execute and build those sort of memories that are needed. And that's what virtual reality offers. All right, so tech and mental health, what's working and what's not. Article there. I found that actually interesting in regards certain statements. So this next piece of news here is from Yahoo Finance. This is also in tech. Tech's early quarter will bleed into October. This is from Yahoo Finance from writer Daniel Howley, technology editor for Yahoo Finance. Tech's ugly quarter will bleed into October. There's a video there you can watch as well. This article is featured in Yahoo Finance Tech, a weekly newsletter highlighting original content. Tech's ugly summer will get worse before it gets better. The third quarter will mercifully come to an end Friday, closing out a train wreck for big names in the tech industry as fears of recession, changing consumer appetites, a broader bear market, and supply chain snarls conspired against the once hot sector. So that's tomorrow, right? Shares of big tech companies have collapsed. Year-to-date, Meta is down 59%, while Nvidia is down 58%. Amazon AMZ is off 31%, same as Google, and Microsoft is down 29%. The only firms outpacing the broader S&P 500, which is off 22%, are Tesla, which is down 21%, and Apple down 15%. I'm actually going to take a note of that, and because to me, it's like if it's down like that, I don't know how much further it's going to go down. On the marketplaces, we'll have to keep tracking that. But otherwise, to me, I find that like a buying opportunity. If year-to-date Meta, things like Nvidia down, I would definitely go in on Nvidia. Most definitely. Down 58%. All right, I'm buying. Not financial advice. Do your own research. Only do what's comfortable to yourself, and only take the risk and risk what you can afford to lose. Not financial advice. Again, this is just me and saying what I personally am interested in, which is 58% down on Nvidia is for me like a buying entrance, as well as for Amazon especially, and Google for that matter. All right. Tesla also, and Apple most definitely. It's the most negative I've seen tech going back to 2009. A lot of it is new tech's coming out that's going to be massively competitive that a lot of the companies like Apple and stuff are trying to wrangle up developers to work and network within their company. Wedbush Securities Managing Director Dan Ives told Yahoo Finance on Monday, noting that investors are shying away from riskier investments like tech, but long-term tech investments shouldn't lose hope, especially if consumer demand for products like Apple's iPhones and cloud computing orders for companies like Microsoft hold pace. And while we could see ugly earnings reports in October, tech companies could start to bounce back by the new year. Tough going for everyone but Apple and Tesla. How do we get here? What life has returned to normal? Well, while life has returned to normal for most people, the shocks the pandemic sent through the economy continue to reverberate with some of the highest inflation we've seen in decades. The Federal Reserve is responding by driving interest rates even higher. In turn, a strengthening dollar is also hurting companies. Sales abroad, with many firms reporting foreign exchange rates as a major pain point in their last earnings reports. These microeconomic factors took a particular toll on tech companies specializing in discretionary items as consumers pull back from making purchases. It said to say it was a difficult quarter for tech companies is an understatement. And while they are getting hit with it by inflation and rising interest rate, it's showing through in different ways. So NVIDIA has seen sales of its graphic cards drop as PC sales falter. Chip companies, for instance, saw demand for semiconductors fall amid declines in PC sales. Ahead of its second quarter earnings, NVIDIA announced it would miss its prior projections as gaming sales dried up. According to the company's numbers, gaming segment revenue dropped an eye-watering 33% year over year in this quarter, and 44% compared to the first quarter. Worse still, NVIDIA missed street expectations for its third quarter forecast, saying it will bring $5.9 billion rather than $6.9 billion analysts had expected. New things like new Xboxes, new PlayStation stuff, people are migrating away from building PCs and PC gaming. I certainly am not, though. Intel took a similar hit as PC sales fell, and Microsoft reported that its Windows OEM revenue, the money it brings in from sales of Windows to PC makers, fell 2% year over year. Intel INTC, meanwhile, took a hit thanks to a decline in PC and server chips. The company is projecting 2022 year-end revenue will be $11 billion lower than initially expected. Meanwhile, ad-supported tech companies like Meta and Snap have been hurt by Apple's AAPL privacy changes that prevent apps from tracking their users' activity across the web. And slowing ad sales amid the current economic climate resulted in Meta's first ever year-over-year revenue decline, dropping by 1%. Snap hasn't done much better, announcing layoffs and cuts to products like its drone camera. Amazon, for its part, is trying to correct itself after overexpanding its e-commerce division to deal with the crush of orders during the height of the pandemic. And while it beat on revenue expectations in the second quarter and surpassed third quarter projections, there's no telling how a slowing economy could impact overall sales. Some companies, however, have continued to perform surprisingly well. Not only did Apple beat analysts' expectations on revenue and earnings in the second quarter, but it also set a quarterly revenue record as well. Tesla, meanwhile, met revised expectations for the year, announced that June was its highest vehicle production month yet. It's not all doom and gloom. There are other bright spots in tech, chiefly in the cloud space. While Microsoft's Windows OEM division was slapped in the quarter, its cloud business did incredibly well. The company missed analyst expectations on overall revenue, but its intelligent cloud revenue was up 40% year over year. NVIDIA, meanwhile, saw its data center business revenue jump 61% in the quarter. Fundamentally, enterprise tech was held up well, as budgets and spending are not tapering off given the massive spending allocated to cloud and digital transformation projects, said Ives. That said, the softer economy is now front and center, and we would expect foreign exchange and macro headwinds to be a key theme during the tech earnings season in October. These stocks are reflecting a lot of bad news in the street, and the street will breathe a sigh of relief if demand holds through the rest of the year in the beaten down tech sector. Demand for Apple's new iPhone 14 line is also holding steady compared to iPhone 13, with Pro devices getting the biggest push. That could bode well for sales in the coming quarters. Companies are also committed to investments despite the economic downturn. During Intel's Innovation Conference on Tuesday, CEO Pat Gelsinger said the company is continuing to move forward with its plans to build out chip foundries and is dedicated to move into the graphics chip market. The coming holiday season will be an incredibly important time for the industry as analysts and investors look for hints as to how everyone from consumers to advertisers are spending their cash, and with luck, that could point to improvements heading into next year. Once things settle down, I think you'll see tech companies be some of the biggest and fastest gainers, Tech Analysis Research President and Chief Analyst Bob O'Donnell said. The hard part predicting when that will be, but I am hopeful for the first quarter of 2023. So again, this is from writer Daniel Howley, tech editor at Yahoo Finance. For this article here, Tech's ugly quarter will bleed into October. I'm going to spin up the next. Excuse me. I'm going to spin up the next article. I have two of our articles left here to read from. We're going to close out the stream for the day. The last article is more just a notation article of what's going on in finance overall. This is also from Yahoo Finance. BlackRock shuns stock unrealized recession and the risk of the Federal Reserve. So BlackRock, we shun most stocks amid unrealized recession risk. This is from Alexandra Semenova, reporter for Yahoo Finance. Again, there's another video here. You can read this or watch this on the recap video on YouTube. I'll have all these article links integrated in there after this live stream concludes. The world's first largest investment manager is avoiding the stock market and warning investors to do the same. Strategists at BlackRock's BLK Investment Institute said in a note published Monday that the firm was shunning most stocks as monetary policymakers underestimate the severity of a potential recession that could ensue from aggressive rate hikes. Many central banks, like the Fed, are still solely focused on pressure to quickly get core inflation back to 2% without fully acknowledging how much economic pain it will take in a world shaped by production constraints. A team led by Jean Boivin wrote in the note, We're tactically underweight developed market stocks and prefer credit. S&P 500 little charting there. BlackRock's message comes amid a brutal rout in equity markets that has all three major averages in bear market territory. As of Tuesday's close, the benchmark S&P 500 was roughly 24% below its January all-time high, while the Dow was down 21% over the same period. The technology-heavy Nasdaq has plunged 33% since peaking in November 2021. A brutal streak of selling that has deepened losses across stocks came after Federal Reserve officials raised interest rates by 75 basis points for a third straight time last week. Chair Jerome Powell said in remarks that officials were ready to weather an economic downturn in exchange for restoring price stability. Central banks around the world have also proceeded with combative rate increases in efforts to mitigate global inflation that has climbed at the fastest pace in decades. BlackRock strategists argue that recent inflationary pressures have been triggered by a structural shift in spending from services to goods, as well as production constraints caused by the pandemic, war in Ukraine, and China's COVID lockdowns, issues that cannot be resolved with monetary policy interventions. Central banks can't fix these constraints, in our view, hence a brutal trade-off trigger a deep recession by hiking rates or live with more persistent inflation. The note said the Fed's forecasts don't acknowledge this trade-off. BlackRock's assets under management topped $10 trillion late last year, making it the largest asset management firm in the world. So this is from Yahoo Finance. BlackRock, we shun most stocks amid unrealized recession risk. I have one last article subset here, and this is to go through the overall financial conditions and notations of news going on globally in the marketplace. This is from Financial Times. So this is live news updates from September 28th. So this serves like Hurricane Ian hits Florida. U.S. offers Ukraine $1.1 billion in lethal aid. So leverage their market expertise. Oh, this is not going to, oh man, it's going to cut me off here. All right, never mind. I went there before, and now it's like you get that one visit and then nothing. Let's look into it. Let's see financial news. Finance and stock news. How about that? I should put that into there. Finance. And stock news. Let's go. See what we got here. Stock market, 4 tickers trending on Yahoo Finance. You can check out. I want to see something that's been like within. Oh, this is all like recent stuff. Let's see. I'm just gonna go finance news. We're gonna close up the stream. If I don't find anything, we'll just jump back over it. American finance updates. How to get hurricane. That's I'm not gonna go into that. Trump sued. Let's see. I actually was going to read this one right here. Let's do this. UK central bank intervenes in market to halt economic crisis. This is from AP News by Danica Kirka and Jill Lawless. So I guess a lot of bonds have been being sold off, and England's UK stepping in. London, AP, the Bank of England took emergency action Wednesday to stabilize UK financial markets and head off a crisis in the broader economy after the government spooked investors with a program of unfunded tax cuts, sending the pound tumbling and the cost of government debt soaring. The central bank warned that crumbling. So I was trying to see if I could stop this ad rolling over there. The central bank crumbling confidence in the economy pose a real risk to UK financial stability, while the International Monetary Fund took the rare step to urge a member of the group of 7 advanced economies to abandon his plans to cut taxes and increase borrowing to cover the cost. The Bank of England said it would buy long-term government bonds over the next 2 weeks to combat a recent slide in British financial assets. The bank's actions are focused on long-term government debt, where yields have soared in recent days, pushing up government borrowing costs. Were dysfunction in this market to continue or worsen, there would be a material risk to UK financial stability, the bank said in a statement. This would lead to an unwarranted tightening of financial conditions and a reduction in the flow of credit into the real economy. The move came days after Prime Minister Liz Truss's new government sparked investor concern when it unveiled an economic stimulus program that included £45 billion, $48 billion of tax cuts and no spending reductions. It also wants to spend billions to help shield homes and businesses from soaring energy prices, sparking fears of spiraling government debt and higher inflation, which is already running at a nearly 40-year high of 9.9%. The British pound plunged a record low against the US dollar Monday following the government's announcement, and yields on UK government debt soared. Yields on 10-year government bonds have risen 325% this year, making it much more expensive for the government to borrow to finance its policies. The Bangladesh's plan to buy government debt helped stabilize the bond market, with 10-year bond yields falling to 4.235% in midday trading in London. Yields also measure the return buyers receive on their investment had risen to 4.504% on Tuesday from 3.495% the day before the tax cuts were announced. The pound traded at $1.06 rounded out on Wednesday in London after rallying from a record low of 1.0373 on Monday. The British currency is still down 4% since Friday and has fallen 20% against the dollar in the past year. Opposition parties demanded Parliament be recalled from a 2-week break to confront the economic crisis, but Truss and Treasury Chief Kwasi Kwarteng stayed silent and out of sight, gambling that the economic storm will pass. Northern Ireland Secretary Chris Heaton-Harris, one of the few government ministers on View Wednesday, said the government's policies would make my country richer and more prosperous. I think you will find economic policy takes more than just a couple of days, he said. On Monday, the Bank of England had refrained from an emergency interest rates hike to offset the slide in the pound, but it said it would be willing to raise rates if necessary. But the bank's next scheduled meeting is not until November, and the lack of immediate action did little to bolster the pound. The bank was able to step in immediately with bond purchases because its financial policy committee has a mission to ensure the stability of the financial system. The British government said it has fully underwritten the central bank's intervention on government bonds known as gilts. The bank has identified a risk for most recent dysfunction in gilt markets, so the bank will temporarily carry out purchases of long-dated UK government bonds from today in order to restore orderly market conditions, the Treasury said in a statement. The UK government has resisted pressure to reverse course, but it says it will set out a more detailed fiscal plan and independent analysis from the Office for Budget Responsibility on November 23rd. Kwarteng met Wednesday with executives from investment banks, including Bank of America, JP Morgan, Standard Chartered, and USB, in a bid to smooth markets alarmed by its economic plans. The Treasury said Kwarteng underlined the government's clear commitment to fiscal discipline and promised new measures soon to boost economic growth, including the deregulation of financial services. The central bank was spurred to act after volatility of financial spilled over into the broader economy, raising borrowing rates from the government, limiting mortgage options for buyers, and forcing some pension funds to sell long-term government bonds used to manage risk. Some analysts estimate that the recent spike in bond yields has added about £20 billion to the cost of servicing the UK's ballooning debt. In addition, British mortgage lenders have pulled hundreds of offers from the market amid expectations the Bank of England will sharply boost interest rates to offset the deflationary impact of the pound's most recent slide. Market reaction to the government's plans also has exposed vulnerabilities in UK pension funds, in particular some defined benefit pension plans where employees shoulder the risk of guaranteed payouts for their retirees have been forced to sell long-term bonds to cover liabilities, creating the potential for a downfall spiral in the process. Extraordinary intervention came amid growing concern that defined benefit pension funds were a risk of being hammered by the plunge in the value of the pound and sharp moves in the long-term gilt markets, said Alice Hain, a personal finance analyst for Best Invest. Jajit Chadha, director of the National Institute of Technology, said social research described Wednesday's action as a very much traditional central bank intervention to limit market turmoil. What we need is a bit more of a calm preparedness to commit to the market that we think policies should be designed these days, which is proper scrutiny by experts and understanding of how its impacts on the economy and a limit to the disruptive tendencies, he said. We don't need to disrupt this economy anymore. I think that's the full article right there, right? Yeah. So this is the last article I'm going to read from for the day here. Again, U.S. central banks and UK central bank intervenes in market to halt economic crisis from buyback of bonds and buying bonds. A lot more retrospects that were shared over there. All right, that is all I have for the news today. Turn all this cool jazz off. If you're on the YouTube side, please do subscribe, turn on the bell notifications here to blockchain, tech, and finance news every day at best at 7:30 a.m. EDT time. No more business communications before the stream. All my business communications will take FireGamer23 in the comments saying, hey, what's up? Give shout outs, put your comments in there. Say what's up, say hey. Say what you're researching on the news, and that's on the Twitch side. So yeah, if you're on Twitch, Twitter, YouTube, please do give a follow, give a subscribe, give a like, give a retweet. And I'll be back here midday with Love, Death, Art. Rerunning that from 12 p.m. EDT time for a little bit. Not as long as I ran it yesterday, most definitely. It'll be like shorter streams, most definitely. And then in the evening times, I'll be going into gaming content, video gaming. In the evening solely on Twitch. So that's all I have for today. Again, this is Blockchain Tech and Finance News. Smash the subscribe button live weekdays at 7:30 a.m. EDT and Saturday at 11:30 a.m. EDT time. If you're into NFTs, you can check out Kin's Art, my art on OpenSea and Foundation. Follow me on TikTok, KinToshi.gg. Follow me on Instagram, KinToshi.gg. Follow me on Twitch, KinToshi.gg. All right, y'all. Without further ado, have a great and safe, kind day wherever in the world you are. I pray you are doing great and staying positive and staying safe. That's all. Peace be with you. Onamashigas. Ciao. Take care. see you tomorrow. Or see you, join me a little later today.